Ladies and gentlemen, good day and welcome to the Chambal Fertilizers and Chemicals Q4 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Parar from CDR India. Thank you, and over to you, sir.
Good day, everyone, and thank you for joining us on the Chambal Fertilizers and Chemicals Q4 and FY24 earnings call. We have with us today Mr. Abhay Baijal, Managing Director, Mr. Anand Agarwal, CFO, Mr. Anuj Jain, Assistant Vice President Finance, Mr. Tradeep Bharat, Vice President Legal and Company Secretary, and Mr. Ashish Srivastava, Vice President, Sales and Marketing. Before we get started, I would like to point out that some statements made or discussed in the conference call today may be forward-looking in nature and must be viewed in conjunction with the risks the company faces. Chambal Fertilizers and Chemicals does not undertake to update them. The statement in this regard is available for reference in the presentation. We will begin this call with opening remarks from Mr. Baijal. I would now like to invite Mr. Baijal to share his views. Over to you, sir.
Thank you, Rishabh, and good day to everybody and a warm welcome to all of you participating in this call. We are happy with our financial and operating performance for the quarter and the year ended March 31st, 2024. Since you would have had the chance to go through the presentation and financial performance shared earlier, I will not spend time restating the numbers in my opening remarks. Our urea business continues to perform well. Gadepan 1 and 2 both underwent plant maintenance shutdown. And in addition, we went through the implementation of the energy saving schemes for both plants 1 and 2, which were successfully implementing and delivering better results than what we thought about. The production of urea for the year was 33.83 lakh tons, and it was comparable to the previous year. Subsidy received was 14,480 crores in financial year 24. The reduction in subsidy inflow was basically due to lower gas prices and lower NBS fertilizers. Our TAN project is going as per plan. The statutory approvals are all in place. We have spent about 260 crores till March 31st. All orders for long lead items have been placed and construction activities are progressing well. Our focus on crop protection and specialty nutrients continues. We are on track to achieve our 26-27 numbers of 300 crore plus EBITDA. We have a strong pipeline of 12 new products of CPC for FY25 with a focus on weedicides. We have already launched 4 of these products in the last month. Chambal Fertilizer, with its well-entrenched relationships with both leading global innovators and the pharma expansive presence and efficient sourcing capability, is optimally positioned to be a complete solution and service provider for nutrition and crop protection. In addition, we have now started focusing on biological products. We have already 2 products in the market, Mycorrhiza and Bio-Nano-P, which was launched last year. One was launched last year. This year we have launched Bio-Nano-P, which is basically a nano-P developed biologically by action of certain microbes on phosphate rock. This is a completely new type of product as compared to what is available in the market. This is called Uttam Pranam, and this is in collaboration with our research partner, TERI. We are also evaluating 2 more biological products which are presently under trial under our Uttam Santulit Poshan Abhiyan. This is basically where we test out all these products in our own farms, evaluate the results, and then launch the product. In the Seed to Harvest program, Chambal Fertilizer continues to make strong progress. In quarter 4 and FY24, Chambal Fertilizer took 6,300 farmer meetings, reaching out to 3.5 lakh farmers. We collected 87,000 soil samples, covered 2,941 villages and 300 locations. We continue to explore opportunities to create value. As we speak, our board has also approved further energy efficiency projects worth about 120 crores. and these will be implemented in time for our annual turnaround of Gadepan 1 and 2 plants in 2026. So, keeping these in mind in the challenging macro environment, we are happy with our performance in the just concluded financial year and look forward to doing better in financial year 25. With that, I'll take your question.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prashant Biyani from Elara Securities. Please go ahead.
Yeah, thank you for the opportunity. Sir, first of all, thanks for bifurcating the segment financials into manufactured and complex. It increases the clarity significantly. On the question, sir, what led to decline in profitability for urea business?
See, Prashant, there are 3 factors. One is that our sales as compared to last year are down by about 1.8 lakh tons. 1 lakh tons.
No, sir. For the year, it is
1.8 lakh tons. And in addition, our ammonia business is a little soft this year as compared to last year. Both these 2 things combined majorly towards reduction in the urea contribution.
Okay. And, sir, how much was the G1, G2 shutdown related cost? Was it something very material?
The repair and maintenance cost for each of these plants would be 9 to 10 crores.
Okay. So for FY25, what would be the growth drivers segment-wise, if you can highlight?
See, I am not the one segment that we would definitely improve is in urea, and that will be the energy efficiency projects which have been put in. So since they have started delivering results, possibly better results than what we thought, there will be some benefit coming out of there. As far as the complex fertilizers business is concerned, we are treading carefully. Last time also in the previous quarter I had told you that it's a portfolio approach. We have a basket of NPK and DAP. We have already placed about, or rather contracted for almost 2 lakh metric tons of material, both MOP, NPKs, and we have also taken some amount of DAP. Going forward, we have to see how to balance this portfolio for the best and optimum results. So, although we have done about 150 crores last year, we will either match it or be a little less than that. That's my expectation. As far as the CPC SM business is concerned, we are majorly focusing on growth in that particular sector. That's how it's going to pan out.
Okay. Sir, on the energy efficiency projects, how much has your efficiency improved by in terms of cal per metric ton?
I can say that the expectation in the first plant was roughly about 3%, 2 to 3%. That has actually been a little better. That is better by about 45 to 50%. In plant 2, it is about 20% better than what we had assumed. Earlier it was about, the expectation was that it would deliver about 1.5%, but we will do 20% better than that.
Okay. And sir, for to FY25, what would be the capex plan?
There are two types. One is routine maintenance capex, and one that we will do ordering for the new energy saving projects. My expectation is about 360 crores.
And bifurcating between maintenance, efficiency and TAN?
TAN, of course, this is not, what I told you was not TAN. TAN is separate. The TAN is about 700 crores additional. And as far as in the 360 crores, roughly 40-50 crores would be the ordering amount. And balance will be maintenance and all.
Okay. Sir, any update on nitric acid value chain projects that you are evaluating?
Yeah, we are going in for a detailed cost evaluation on concentrated nitric acid, which will be ordered on one of the major licensors. That has been approved.
Okay. Thank you. That's it from my side.
Thank you. A reminder to all participants, ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Harmish Desai from Phillip Capital. Please go ahead.
Good morning, and thank you for taking my question.
Sorry to interrupt, Mr. Desai. May I request you to use your handset so your audio is muffled?
Proper now?
No, sir. It's still the same, sir.
Is it better now?
Yes, sir. Please go ahead.
Okay. So as I was saying, my first question is just wanted to ask. In Q3 and Q4, we saw the DAP sales number going very low. So do we expect the same run to continue in FY25 as well, where and because the subsidies also decreased. So do we expect the same to continue in FY25? Less DAP sales?
If I get you right, you are asking about DAP sales?
That is right, sir. Yes.
So essentially, DAP currently with the fixed MRP regime that is there was not really very viable. So we have not concluded many contracts there. In any case, quarter 4, we really don't have much sale. So the sale actually begins in quarter 1. That is going up to quarter 1 and quarter 2. So there has been a softening in prices internationally, and some things are coming in rates. So we will see and and take it as it comes. And we've already contracted about 60,000 tons of DAP.
Got it. Sir, and just wanted to get an update on, so Coal India announced this coal gasification project under which, tie-up with BHEL, they're going to manufacture 2,000 tons of ammonium nitrate on a daily basis. So is it going to be a threat to our project, which we are coming up, the TAN project?
No, not really. It was the background growth is about 6%, as I understand, CAGR. We are already at 1 million tons plus. It means that every year 600,000 tons is being added, and the continued emphasis on infrastructure means we need more steel, we need more coal, we need more iron. So the mining activities will further increase. So we are quite confident that the market will absorb these quantities.
Understood. And sir, this nano phosphorus that we have launched, can you provide some details on it? What do you expect the market size? Is it our own patent? Any updates on that?
Could you repeat the question? I'm not very clear. Are you talking about the new biologicals that we have launched?
The nano phosphorus which we have launched.
I will ask Mr. Ashish Srivastava to brief.
Okay. So this is the product which we have launched is a nano phosphorus which is other than the nano available in the ecosystem. This is the only product which is derived through a biological route. So and the research trial shows that there can be reduction in DAP consumption. We are not claiming anything, but there can be a significant growth in this segment. Putting some numbers on the table will be difficult as of now. We are launching the product in a week's time and targeting around 5 lakh acres in Kharif.
Okay. And any pricing of the product? How is it priced?
See, the present nano DAP which are available in the market are 500 ml bottles, and they are priced at an MRP of around 600. But ours is a biological product, and it's in 250 ml bottle. So the price would be comparable to the in the ecosystem. I cannot spell out the exact number as of now.
Understood, sir. And lastly, if you can provide me the bifurcation between G1, G2, and G3, and the gas prices for this quarter.
Gas prices for this quarter was around $17 per MMBTU on NCV basis.
Okay. And the bifurcation between G1, G2, and G3, volume-wise?
So G1, G2 both has gone through annual ATR, so the utilization will be lower. However, actual numbers will let you know separately.
Sure, sir. Sure. Done. Yeah. That is it. Thank you so much.
Thank you. The next question is from the line of Viraj Kacharia from Simple. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just a couple of questions. First is on the G1, G2 energy efficiency, which we talked about. So what you said is 20% improvement in plant 2 and 4 to 5% improvement in plant 1. Am I right?
No. What you are saying, you can't improve energy by 20%. Okay. The normal rate for improvement in these plants is between 1 to 3%. On any of these projects, not more than 1 to 3%. And it goes in steps because you debottleneck each and every process element as you go along. And this is done over a period of, I think, 10 to 15 years. So we have been doing this for Gadepan 1 since almost 1995-96, and for Gadepan 2 from 2000-2001. So it is a long journey, and every time the delta is almost 1 to 3%. What I said was the improvement that was expected, of that the additional is about 40% or 1 to 2%. You get my point?
So improvement of 2% over whatever we had in 23-24, and instead of 2%, it can be around 2.5-3%. That is what for G1, and
it will be 2.
For G2, then another 20-25% on that. So around 2% on G2.
Okay. I understood. What I was trying to ask is, the plant which is under, so both the units are under grouping 3 for the NPS policy, and the policy was supposed to come out with the new energy efficiency norms in 2025. Now, and even in G3, we may be one of the most efficient units, both G1 and G2. But if the units were to come up for the energy efficiency targets were to revise or tighten further, and this is a trend we are seeing across industries, government focusing on better energy efficiency and emissions, would the savings which we expect post this investment, would that largely offset, any adverse, impact we may see, or you still see a positive, outcome for us?
This is a matter which is not yet. There is a discussion that it will be a discussion in depth with the industry in 2025. As an industry, we have been representing that energy efficiency projects must be encouraged, and that is what has been the stance of the Fertilizer Association of India. As far as Chambal is concerned, we are well below the norms as far as the current norms are concerned for the group in which we belong under NUP 2015 policy. We do not expect any great reduction in the energy revision, even if it were to happen in a frame of 2025-26. If it will be done by some other compensating factors. That is the understanding that we have from the government. So there will be some compensating factor, something else. It will not be a negative, net negative on the companies, because the government understands that the urea industry is a very fine industry asset which has been created, over a period of roughly 40 years through various policy interventions. And it is vital to the food security of the nation. You must understand that out of the 3.2 crore or 320 lakh metric ton of urea that is produced, almost currently 90% is indigenous after the coming in of the new plants. And the underlying growth of urea is between 1.5 to 2% CAGR, which means that every year you add about 600,000 to 700,000 tons of consumption. That is because as we increase the irrigation penetration in various other hinterlands and with advanced practices for farming, the usage of fertilizer is going up, and with the focus on maize, biofuels and so on, this will further go up. So the government will have to keep a certain percentage of domestic production running, otherwise we will be totally focused on the vagaries of the import market. That is very well understood inside the government circle. So I don't think that even if they did something with I'm just saying, even if they did something with the energy efficiency norm, there will be some other compensating policy interventions.
And the second question was, the way the prices are for gas prices, ammonia, and even the input parity prices for urea. How should we understand spreads for us in 25 for the urea manufacturers?
See, as far as the NUP 2015 units are concerned and even NIP 2012 units are concerned, there is a cost plus formula which operates. So the spreads are protected given what the formulation in the policy is concerned. It is only when you go beyond the reassessed capacity that there is a kind of comparison with the international import parity prices. There could be, I would say, times when this is very low or could be negative for some units with high energy costs. But overall, the industry has been managing, and in any case, even in the old policy, there was a cap on the maximum that you would get on the import parity. That is something of the order of 1635 or some $20 odd. So that's not a very great number in any case. However, in case there is a complete upturn in the urea price going down to some 280 to 90 level, definitely many parts of the industry will have to relook at their production plans. And I'm sure that the government is cognizant of that. This is a continuous dialogue that takes place between the industry and the government on this issue, and they can, as per policy, make some adjustments.
Okay, so for 25 as a whole, if I look at comparison to 24, with the way the prices are right now, and considering the energy savings which we would expect to kick in from 25 or 1 and 2, would it be right to think that the spreads which we earn on a full year basis would by and large be similar?
No, it will increase. You see, please understand that when we talk energy efficiency, we are actually talking of lowering the consumption of gas per ton of urea. And you can make an assumption that, look, we reduced about roughly, assuming that the norm says that we are using 5.5 Gcal of energy for NUP 2015 units, and as per norm is around 5 Gcal per ton for NUP 2012 units. The total quantum of gas that we purchase for this operation is of the order of something like 15 million Gcal, which is roughly about 60 million MMBTUs. So if 1 or 2% saving is there, translates into a big number. And that adds directly to the bottom line.
Okay. I just have a few more questions. I'll come back in. Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question is for the line of Rohan Gupta from Nuvama. Please go ahead.
Hi, sir. Good morning. Sir, first question is on our Gadepan 3. Sir, I think that this plant is under review in terms of the policies in FY2025-26. What is the expectation in terms of the profitability per ton as far as the G3 is concerned, sir?
No. First of all, it is not under review in 25-26. It will be under review only in 26-27.
Okay, FY27 you are saying?
Yeah.
Okay. And sir, how you see that the policy changes will be having impact on the profitability on this plant? I mean, it will be brought down in under the current system?
Anybody's guess. There are so many things floating around, from decontrol of urea to open pricing, MRP. I don't know what the government... Let's wait for the first 100 days and then we will talk about this.
Okay. Sir, in terms of our future plan as far as the urea business is concerned, I think that our existing site is fully utilized in terms of the land utilization. If you see that if there is any change in policy from the government, however, we see that India has already achieved almost self-sufficiency as far as the urea is concerned with the recent increase in manufacturing capacity of urea by multiple players. So do you see that going forward you will have further plan to increase the capacities if there is any changes or tinkering in the government policies as far as urea is concerned?
See, Rohan, sometime back our people have put up a paper to the government informally, and our calculations show that we will again start swinging back into negative from 28, 29 onwards. We are, as it is, a little negative. But the way it is that with 6-7 lakh tons increase in the consumption every year, the way it is going, we will be again in a kind of an imported situation by 28, 29, at least 3.5 to 4 million tons of 5 million tons. Above whatever exactly today it is. Even last year we have imported 7 million.
So I'll just add, Rohan, this question of self-sufficiency in urea is still a long thing. If you look at the number, 6.2 million tons of imported urea was sold in our country last year. And if you look at the CAGR of urea, it's going at roughly around 2%. So at least only one more plant yet to be commissioned, that's Talcher, which will take another 2.5-3 years, which is, say, 1 million tons. So still a lot of gap in urea.
My question was that will you be willing to put a urea plant going forward if there is any tinkering in the government policy?
Well, that is a hypothetical question, and we have to see. Let me also point out that there are possibilities of putting up it in our own complex, which we have. There are possibilities. Technically, it is possible. When and how we will do that is dependent on what conversations we have with the government. As I have said, we have had put up a paper, not from the point of view of anything else except to apprise them that going in 28-29 time frame, we will need at least 2 to 3 plants to supplement the supply of urea. That's our assessment. What the government does is between the NITI Aayog, Planning Commission, government policy makers, that we don't know. But according to us, the writing is very clear on the wall.
Sir, second question is on our reporting. So thanks a lot for giving the segmental reporting, which really makes it very easy to read the numbers. Sir, there in terms of the own manufactured fertilizer profitability, it has fallen down significantly from 23 to 24, from 1,900 to 1,500 crores. It is primarily related to Gadepan 3 plant, right? And why it would have fallen so much?
No, you must understand that there has been a swing of almost 1.8 lakh tons in sales last year to this year. And it is in one of the plants which has a higher contribution. So that makes the difference.
So it's an additional volume of 1.8 lakh ton on a Gadepan 3 plant.
Not exactly Gadepan 3. It will be, I think, half and half.
Okay. But the profitability difference will be only in a Gadepan 3 versus, because that is the only plant where we have a higher profit margin per ton, right? Because earlier plants, I mean G1, G2 are still under the old regime, right?
So, Rohan, it's not only urea. We also manufacture some surplus ammonia, and this current last year there were very high margins in ammonia. This year the ammonia margins have come back to normal. So there will be a gap, substantial gap into that. And please also understand that we had a shutdown in all the plants in the current year. So that also takes our expenses higher. So overall, if you see, then it culminates into the number which it is there.
Okay, got it. So just last question from my side, and I'll come back to you. So on CPC and SN business, we have a pretty decent margin. At EBIT margins are roughly at close to 19 to 20%, which is pretty high given that the industry standard. However, we don't have any, it is still for us is a branding and trading business. You see that this kind of margin, 19 to 20%, how it is, we are able to achieve those margins, and do you see that these margins are going to sustain in our business?
I would like Mr. Ashish Srivastava,
Rohan,
originator of this business.
Okay. So, Rohan, a good question, but the margins are culminating from the price positioning of the products, which we started initially. So we targeted the MNCs with regards to positioning or price positioning of the product. That's why these are sustainable at least for a couple of years. And we are not competing with Indian manufacturers in terms of MRPs and price positioning. So that is one of the reasons. So it is sustainable.
And you are saying it is across, including CPC as well as SN. Your SN is roughly 30% of the revenue. So it's not only skewed. It's not skewed toward SN. It's across the CPC as well as SN.
It is across. Yeah, and specialty nutrients. We had the first movers advantage in the bentonite sulfur business, which gives us, and the product is sourced from a very efficient supplier from Saudi Arabia. So the best product in that segment, that's why the best price positioning.
And in terms of asset allocation, it is still very small towards this business, right? Because we don't have any backward integrated manufacturing plant as far as CPC is concerned. I think that most part of our portfolio there is a trading or outsourcing model. So because that is likely to remain in this way, or you plan to invest significantly going forward in CPC manufacturing or in that segment?
So, Rohan, anything is on the table. See, the point is this, that there is two ways of looking at it. One is to focus on certain lines in the CPC business, which we don't think is very wise. We have a open portfolio approach, which means that it could be a combination going forward, that we will continue to do what we are doing, but we may get into one or two specific lines. That depends on what we think are the future growth options. But there, because it will be an asset allocation, we have to carefully think through the 5, 6 years, 7 years product profile, movement, how it will move and what it will do. So one of the things that we are doing in order to get more depth in the business is to start talking strategically to many, reputed manufacturers, Japanese and so on. And we are starting to get a feel as to what this business or this research-based stuff or the Gen 1 molecule actually means. And as we grow in that, I think this will be the first year when we are introducing certain Gen 1 stuff. And once we have a 1.5 year experience down the line, definitely our thoughts could change in terms of what we will try and do in terms of an open portfolio approach. We could mix in some amount of asset allocation towards that, if you will. That's what our response in this matter is.
So thanks, sir. And if I'm allowed for the one more last question from my side, especially on our DAP and complex fertilizer trading. Sir, last year hasn't been so great, but even recent, in the current scenario also the DAP prices are quite muted in the global market, but so as in the domestic markets as well. Just wanted to understand what will be your strategy in the current year as far as the DAP trading is concerned. That is one. And second, the recent government paper has proposed that up to the 12% kind of margins are allowed for the completely backward integrated manufacturer for complex fertilizer and DAP. In that sense, and under that policy, do you see that still trading makes sense, or in future you may be looking forward for backward integrating your business in DAP also?
So let me tell you that at the moment we do not have any plans for getting into this, but I am happy to tell you that in our joint venture in Imastate, we are strongly evaluating expansion of the order of 55 to 60% of the existing capacity for phosphoric acid. And should that number on basis of valuation come close to what the management thinks, definitely there will be an investment in that particular line. So that is one thing. As far as the DAP and NPK strategy is concerned, as I have told you, most of our markets are served by DAP products, DAP basically. However, we have territorially demarcated certain areas where we could get in with NPK, and that NPK we have already placed, almost 1 lakh of tons we have already placed. So let's see how that goes, and if we get continuing traction in that, we'll definitely pursue that. I also hope that the government relooks, it's a wish of course, at the current way the LBS is being run. Should it return back to its original format, I'm sure Chambal will not be found wanting in crossing 1 million tons in a very short period of time.
That's very helpful, sir. Thank you very much.
Thank you. The next question is from the line of Dhruv Muchal from HDFC AMC. Please go ahead.
Yes, sir. Thank you so much. Sir, possible to share what was the ammonia profit or savings last year and what is it current year?
It is half.
Less than half.
Yeah, but in absolute amount, sir?
I will ask Anand to ask him the question.
So last year we made around 125 crores. This year we have made less than 50 crores.
This is for the full year, right?
Yeah.
Okay. So, but the decline in the urea business profit, which is for the full year basis, is about, it's about, I think, 400 odd crores. So, about 400 odd crores. So, about 100 comes from this ammonia, but the rest is because of the shutdowns that you have taken, is it?
Sale difference.
So, some is from shutdown, some is from lower sale of urea on a combined basis for all the three plants. So that will be a blended number.
Okay. So, but still the decline then seems a bit large. Probably, okay, I'll try to understand it offline. So the second question is on the efficiency measures, the savings because of the efficiency measures. I mean, a simple way, I'm just trying to understand a simple way to calculate it. Would it be fair to say 1-2% of your material consumed cost, probably some percentage of your material consumed cost would be a fair way to understand the benefit from efficiency savings?
Yes.
Because a large part of your material consumed would be gas, so excluding the purchased thing. So 1-2% of that would be efficiency savings.
Yeah, I'll put it this way. As I told you, we are consuming roughly about 15 million Gcal, which works out to almost 60 million MMBTU. 1 MMBTU costs currently, let's say, ballpark $17. 1 or 2% saving there is a big number.
Got it. Perfect. But this is only for your plant 1 and 2, not for 3.
No, 3 we haven't done any energy efficiency, but we can optimize. See, this is, as it is, one of the most efficient plants in the world. Please understand that there are 2 parts to it. One is by design and one is by operation. What we have got by design is given, and we are actually exceeding what the design parameters are. Whatever the guaranteed figures are, we are below that. If we have to go further below that, we have to do some other things, which has to be seen in the context of the policy parameters that we do, because we have to always compare it with the marginal ton that we produce. The marginal ton is much less profitable than the actual ton. However, efficiency projects work on the entire production. So we have to see in the context of gas prices, the costs, and then the technical feasibility. These studies normally have a cycle time of 1 to 1.5 years. And then there's an implementation time of at least 1.5 years more, because you have to catch up with the next turnaround. So it is a 3-year period in which you initiate studies, and then you come to a conclusion, then you order the equipment, then you install that equipment, and so on. So this is how it goes on, and therefore there is a glide path to achieving the numbers. So I would say Gadepan 3, we are very close to maybe possibly one of the lowest numbers in the world as far as efficiency of producing urea is concerned. I'm not saying there is no further scope, but there is a studies are always ongoing on these issues. As far as Gadepan 1 and 2 concerned, we had the options and we have made those changes, and those changes have started yielding results.
Gotcha. So just my also point was on computation purposes. So when you mentioned 15 million Gcal or 60 MMBTU, that's on all 3 plants. So what savings we are deriving is for plant 1 and 2, just for the consumption of gas in plant 1 and 2, right?
Yeah, but that what I told you was the 3 plants, actually all the 3 plants, because I am taking about 3 million tons of plus production. So, but if you are looking at plant 1 and 2, then the numbers are slightly 4-5% higher, because we are not at 5 levels. We are 4-5% higher than that. So there will be a little bit more proportionately gas consumed in Gadepan 1 and 2.
Got it. That's very helpful, sir. Thank you so much, and all the best. Thanks.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Himanshu Binani from Anand Rathi. Please go ahead.
Sir, hi, and thank you for taking my question. So, sir, my first question was largely on the inventory position. So maybe if you can comment on the inventory position, both the urea and the non-urea for the company, as well as maybe any sense on the industry.
So I'll ask Ashish to answer that question.
Okay, so Himanshu, the current inventory as on 1st of April of urea in the country was around 87 lakh tons. 87 lakh tons. DAP was around 22 lakh tons. NPK is 47 lakh tons. And MOP 9 lakh tons. This is country inventory. And if you look at our inventories, it would be our inventories would be around 8% of the country in urea, and very almost negligible in DAP.
Okay. Got it. And sir, now we have seen a decent amount of time in terms of the nanotechnology. So maybe if you are in a position basically to comment in terms of the volumes for the nanotechnology, maybe in urea as well as in DAP, what has been the volume number, and maybe any sense on the industry would be helpful. Okay, so
Himanshu, this nano urea I will not like to comment, because there is only one product in the market. It would not be proper for me to comment. As far as phosphorus is concerned, 2 nano DAPs along with the nano phosphorus of Chambal have just been launched, which would be hitting the market for the first time. Now, I can't comment on the nano DAP of other competitors, but we are targeting almost 5 lakh acres of a treated area of nano phosphorus in the Kharif itself. Other companies' number, it's difficult for me to quote.
See, Himanshu, it is a process of first time usage, then evaluation, then if the product has actually delivered, then there will be repeat buy. So one has to understand what is the actual difference on the table that the product makes. If there is a visible difference, the product catches up very fast. If it is not, then the adoption could be slower. So, as far as our own field trials are concerned, there have been very positive results. Because of that, we are confident that it will be uptaken by the farmers in great measure or in good quantity. But as we have launched it and the first field trials or other application will happen in Kharif, we will really be able to comment only by Kharif, by Rabi, sir.
Because, sir, the question, the basic reason basically asking this question was largely, if I actually look into some media articles, so we have a comment from the ministry that this year, FY25, India is likely to have a very negligible amount of like urea imports, number one. Secondly, as for your comments that we had something around the 6 million ton of urea imports last year, and the production and the consumption, there is a difference basically. So just wanted to have this sense that how is the volumes picking up basically into this segment. So we have been, the government has been like thumping on this great big time, but then sir, we are like completely in a black box in terms of the volumes. So how has been the volumes shaping up in this segment, both in the nano DAP as well as in the nano urea?
So nano phosphorus and DAP, there are no volumes registered so far because the products have just been launched. As far as nano urea is concerned, if you look at the urea sales, the 46% sprilled urea sales, it has gone up over last year in spite of a significant quantity of nano being pushed into the cooperative segment. So I think the answer lies therein. It would be difficult for me to comment beyond that.
Got it, sir. Got it. And so coming back to my first question, basically on the inventory position. So, sir, any sense in terms of the region-wise inventory, how is that positioned, or maybe what is the starting inventory basically, and any particular reason where we have a higher inventory?
You want the state-wise inventories of urea?
State-wise color, basically, just to get a sense in terms of how the inventories are placed.
Actually, okay, I got your point. It is widely spread across the territory as far as urea is concerned. But in case you want state-wise numbers, we can send it to you later on. Sure. And as country-wide, we can give you country spread and NPK's significant inventories. Only product whose inventories are lower in compared to last year is DAP, and you know the reasons. But if you need state-wise inventory levels, we can send it to you later.
Sure.
So whatever data we have
through our own sources.
Sure, sir. That would be helpful. Thank you, sir.
Okay. Thank you.
Thank you. The next question is from the line of Arjun Khanna from Kotak Mahindra Asset Management. Please go ahead.
Thank you for taking my question. Sir, if you could just help us with how much capex do we expect what would be a capital expenditure for FY25?
I think we made 2 points. One is about 360 crores of ongoing capex, that is maintenance plus efficiency projects as far as urea plants are concerned, and about 700 crores for TAP. Total about 1,060, give or take 1,100, 1,150, that kind of.
Sure. And you also mentioned IMACID is looking at increasing capacities by 40-50%. So would that be funded by its own accruals? We won't have to put in any capital there?
You don't have to put there the cash surplus. As and when the board of IMACID decides, they have enough cash on them.
Sure. And in terms of profitability, do we expect, so when do we expect the profits of IMACID to consequently improve given the capex?
No, see the point, obviously the capex will be done when there is a payback, isn't it?
Sure.
So what is the game in IMACID is that the capacity expansion comes at a significantly lower per ton cost as compared to a green field or even a brown field.
Sure.
So that is where the benefit is.
Sure.
They have found a combination by which they can, by adding some sulfuric acid plant and so on, they are able to expand the capacity at much lower capital cost per ton.
Sure. Sir, just on the energy saving for urea, we had mentioned that 350-380 crores. Essentially, that would be done, and we had mentioned payback in of 100 crores additional profits per year. So are we on track for the same, given where the market is?
No, Arjun, I think you have missed what I have said. When we have, if you see our past presentations,
right,
those are flowing over a period of time. They have not completed at the moment. It happens like this: when you develop a scheme, the scheme is proven on technical grounds, a guarantee is given by the various suppliers. Then you go to the board, then the board approves it, then you order the equipment. So as I said, that's about a 3-year cycle, 1.5 years to develop and 1.5 years to implement. Then the 400 odd crores, I think that we have mentioned in a period of 3 years. So of that, about 130, 140 crores is the fresh one that has been ordered. 180 has been already done. That is how it is going on. You get my point? As far as the 360 crores is concerned, part of it for this year is basically replacement capex.
Okay, sure. I get that now. Sure. Sure. That's it from my side. Thank you.
Thank you. The next question is from the line of Manikanta Gare from Franklin Templeton, India. Please go ahead.
Yeah, thank you for giving me the opportunity. Hope I'm audible.
Yes, you are, but slightly muffled. Could you speak into the phone, please?
Yes, sir. I have a little bit of headset issue. If it is okay, I'll go ahead.
Yeah, please.
Yeah. So the first question is wanted if you can give me the G1, G2 plants FY24 and GCAL numbers. Is that possible?
So normally we don't reveal that, but it is significantly lower than the norm. I can only say that. And after the expansion, it is still better. After the energy project implementation is still better.
Okay. And for the G3 plant, like you have commented earlier for one of the questions, it's very close to the possibly the lowest number that is out there. So is it fair to assume that for the next 3 to 4 years, we will not see any change in the GCAL number for G3?
See, that will depend on one or two schemes that we are pursuing, which is more to work on the ammonia side. But that is subject to many considerations. We are talking to the licensors. The study is on. Once the study is completed, we will know exactly what are the things that they are suggesting by which the ammonia production could be increased and therefore there will be a decrease in the energy. But that is something I can't really commit or comment at right this point because the scheme is under study and discussions as far as that one is concerned.
Right, sir. Like you pointed out earlier, the entire process itself takes 3 years. So if you have just started discussing on that, then it's fair to assume that for the next 3 years at least we will not see any change in GCAL, right?
Yeah.
Okay. So the second question is on your nano phosphorus launch, which is a biological based launch which you have mentioned. Wanted to understand, is it, because it's a biological based product, is it relatively easier or difficult to scale this product? I would assume that it is relatively difficult to scale this product versus a chemical based process. Any thoughts out there? That would be helpful.
You mean scaling of the production of this product?
Yes.
No, it's not difficult because the phosphorus is, taken out from the low-grade rock phosphorus through a biological process. So there is an abundant raw material available to take that. So there is no problem in scaling that up.
To set your mind at rest, this can go, we can scale it up to 2x or 2.5x in about 6 to 7 months' time.
Understood. Right. The third question is on the acid side. Sorry, I just wanted to confirm. You said the expansion is on phos rock or phos acid capacity?
No, it is conversion of phos rock to phos acid. And as I said, this is something that is being conducted as we speak by the licensors in Morocco, and they are due to report this matter in about 2 to 3 months, whereby after that, the board should take a decision.
Okay, understand, sir. And last question on your urea sales volumes versus production. I was just looking, if I have to, see the sales volume as a percentage of the production, for FY24 it is 96%. For the last 3 years it was above 100%. How should I think about this? Because if I look at your sales volume as a percentage of the industry sales, the market share seems to be falling only. In Q1 I see 10.6, in Q4 I see 7.2. Even if I have to see YOY basis also, Q4 last year was 7.9. So if you can just give some color on how should I think about this market share movement here?
So let me just tell you that these plants are designed tight for production that is called stream day production. Let us say we have got Gadepan 1, that is unit 1. Assuming that we are operating it at 3,100 tons per day, then the way I can increase production is that I should run it flat out 365 days a year. If I don't operate it that many number of days, but if I reduce by 10%, then there will be a reduction in production accordingly. Now, in a year when you have a turnaround, which is basically once in 2 years, you lose about 28, 29 days of production, plus any trips and shutdowns that you may have unplanned and so on. So that is as far as the production capacity is concerned. So for most of the plants in India and everywhere in the world, these run flat out on full capacity, otherwise you don't get the energy efficiency guaranteed parameters. However, when you are saying there is a reduction in market share, that is because there have been 2 plants which have come. Last year we had Gorakhpur coming in, and this year we have Sindri and Barauni coming in from HURL. So the net supply has increased from the production. Therefore, there will be a total overall percentage decline. However, what is more important is in the areas that we serve, are we in the areas that we serve in those states that we are, have our market share fallen? Not by very much.
Very clear, sir. Thank you. But just on the question about sales as a percentage of the production, which has dropped to 96% on a full year basis for FY24 versus around 103% for FY23. Any color there?
I will ask
that means that...
Yeah, could you finish your question, please? I thought what you are trying to say is this year, 23-24, we are 96%.
Yeah, the sales as a percentage of the total production was 96% versus 103% for last year.
So last year we carried some stock on the opening, which was also sold, and the production that was made, that was also sold. This year we carried very little stock in the opening, and we carried some stock into 24-25. So there is a negative variation on the sales, as you are slightly pointing out.
Okay, so it's all related to inventory-related variations only. Okay.
Yeah, please. That's it.
Understood. Thank you, sir. Thank you so much for answering my question.
Thank you. The next question is from the line of Manish Mahawar from Antique Stock Broking. Please go ahead.
Yes, sir. My first question in terms of energy efficiency, if you look at G1, G2, 2.5 to 3% of efficiency improvement, right? for a simplification, just wanted to understand, right now if you look at urea EBIT of around maybe 1,500 crores, this energy efficiency will add around 8 to 10% of the additional EBIT to the business?
I mean, let's put it this way. We get around $40-41 per ton average, right?
Right.
So 2% to 3% increase is about $2 to $3, $3-4. You are right. It is 8 to 9% is okay.
It also depends upon the gas prices and
assuming $17 of gas cost. That's what I'm talking about. $17 of gas cost.
Roughly, yes.
Okay. And in terms of when you said, I think one of the comment you made in the call, right? Board has also approved energy efficiency program of 120 odd crores, right? Which is over and above what we have done in the last year.
Yes.
That's right. So how much of improvement can happen after this 120 odd crores is spending?
See, obviously, these are all projects which are developed between 4 to 5 years payback. We don't go beyond 5 years payback.
Okay. But what is sir, energy efficiency percentage? What you said is 2.5 to 3% last year. So this 120 odd crores, how much percentage improvement?
So Manish, you will have to talk offline with me.
Sure, sir, no worry. And sir, right now, energy G1, G2, G3, what is the difference? Basically, I wanted to understand how efficient G3 versus G1, G2 in terms of energy efficiency.
So as we told that, G3 has a much better efficiency compared to G1, G2. It's a newer plant and it's one of the best efficient plants, around the world. So yeah, it is better because in any case, our normative is 5, so it is below 5. And as Mr. Bajal also explained that for G1, G2, it is still above 5. So,
but much below the norm of 5.5.
And much below the norm, which is 5.5 for us.
Okay. But still there is a gap, G1, G2 versus G3 is a 15-20% gap versus energy efficiency norms? Still? Or no?
No, not 15-20%. 15-20% is a huge number.
Okay, understood.
Okay. Yeah.
So that's second question, sir, in terms of AgChem business, CP business, basically you have guided for 750 odd crores of revenue by FY27. It will be around 1750 with the EBIT of 300 odd crores. Right? So this is only a domestic business you're talking about. We are not looking out for any export at the moment, right? Because it lead up manufacturing, what I understand.
So Manish, that can only be possible if we put our plants to produce. This is purely domestic oriented number. Okay. And are quite confident with the growth path that we have, 24-25. We will be achieving that number what we have explained to you.
But that is pure domestic business, right, sir? We are talking about.
Yes.
It's pure domestic. It's only a B2C business, no B2B, no exports in this, Manish.
Understood. Okay. And if we wanted to go ahead with the export, we have to set up a manufacturing within that time frame, which is over and above that.
Without your own technical plant or a formulation unit, you cannot export.
Difficulty to get inside.
Okay. And just one more clarity, sir, in terms of AgChem business, right now we are basically it's a branding business, right? Because we are not doing some sourcing a technical and formulating some with the third parties. It's a pure repackaging and the branding business for us at the moment. That's the right understanding?
But Manish, please understand that we have an open portfolio model. We carefully examine the crop, the season, the pest, and we have got a methodology by which we can focus on those to get to the differentiating products that are there in the market. Some are to be applied early, some are prophylactics, some are late stage when infestation takes place. We have our eyes very tightly focused on these issues. And that is how we have been able to create pathways by which we have been able to grow and source the material. Plus, now that we have got this Santulit Poshan Abhiyan going, we are now entering into a cycle of testing, evaluating, and then entering. And I made the point about biologicals. This is an area that excites us. where we are collaborating with some research institutes to get some products. And obviously, everything will not succeed. But should that succeed, then definitely we will create more pipelines in those lines. And I must also mention that seeds is a business that we are very, very focused upon, and we will be looking at entering it in also in a big way, which we will announce later.
Okay, understood. Okay, understood, sir. And the last point, sir, Bajal sir, I think you commented, just wait for a first 100 days, right, in one of the questions, answering one of the participants. So there are two parts I wanted to understand. One is the DBT and decontrol, right? So how do you see the government intent or infra preparedness in terms of these two things?
Okay, Manish, so the government is thinking of doing some pilots on the DCT front. Instead of direct benefit transfer, they are talking of direct cash transfers in some pilot territories, which would happen in the next year. Upon the success of that, the DBT might get shifted to DCT. We can't comment on that. And as far as your question on decontrol is concerned, government is evaluating all things, whether they are talking of rationalization of MRPs, whether it means decontrol to you or me, we can't say. They are talking of rationalization of MRPs.
Let's see what shape and color it takes, Manish. It is we are not very privy to what is going on, but we do understand that a lot of work has been done internally inside the ministry, and various ideas and proposals are being forwarded and being discussed back and forth. What exactly it will come is that we do not know, but the government wants to relook at this sector and decrease the amount of subsidies that have to be paid. That is one of the general purposes by which they want to do something in this area. So that could mean anything. I mean, it could mean many. But how it will pan out, I don't know.
Whatever action will be taken, basically it will lead to a rise in the urea domestic prices, which is the farmer prices, right, sir, ultimately?
I have no idea. It's very, very premature for us to comment on these issues. I think.
Sure. No issues, sir. And maybe can I ask one more question, sir, please?
Yes, please.
Yeah, so sir, in terms of 4Q, if you look at a bit of the urea business, right, you already mentioned, right, we've shut down of one of the reason, and I think so soft profit of your ammonia business. There is also, I think, IPP linked volume will be lower this year, and also lower urea price will affect this 4Q numbers. That is also right or no?
You're right. There is a element of reduction in the contribution for beyond 100%.
That is also lower in terms of volume and the prices. Yeah.
I couldn't catch you. Could you repeat that?
So basically the IPP volume will be lower versus last in the 4Q, as well as IPP prices will be lower, right? Both the sides will be lower in the 4Q.
No, IPP volume is more or less similar, but IPP prices are low. The contribution, as I said, is low.
Will be lower. Okay, sure. Understood, sir. That's from my side, and all the best, sir.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you very much, gentlemen, for having a patient hearing to what we have to say. I hope we have answered most of your questions, and I also hope that the increased transparency in the publication of results has enlightened you more about Chambal, and we look forward to your continuing this journey as investors with us. Thank you very much.
Thank you. On behalf of Chambal Fertilizers and Chemicals, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.